Here's a quickie then on how to answer audit report questions. You know the sort of question that says, discuss the issue and describe the impact it has on the audit report. Okay, nice and straightforward. All you've got is 3 steps to remember. First step to a great answer is state the issue. What's the issue in hand? Really straightforward. Is it material? Really straightforward. And the trickier one, what's the effect on the audit report? So always state the issue, no matter what it is, no matter how blindingly obvious it is. And it's either because you haven't got enough information or you're not following IFRSs. That's what the company's doing wrong generally. Then you say, right, this is material or not material. Materiality being profit, 5 to 10%, revenue, 0.5 to 1, and total assets, 1 to 2%. Once you've stated that, you're well on your way to passing the exam, and you just say, right, now this is going to have an effect on the audit report because it's either going to be disclosed correctly, which still might have an effect on the audit report, we'll see. It could be that they've just made an error, they're not following the IFRS, or haven't got enough information. All of those 3 things might have an effect, well, the bottom 2 will definitely on the audit report. So let's have a look at those. So what do I mean if you've got an issue and you've disclosed it right? Well, there's no modification, okay, no change to the audit opinion unless it's a big and uncertain issue. If so, you might want to put it as a key audit matter, so an extra paragraph. Or if even though it's been disclosed right, there is a bit of a material uncertainty over going concern, that has its own paragraph as well, material uncertainty over going concern. Okay, what though if it's not disclosed right, it's not all sorted out, it's a material misstatement, it's a material error? Well, now you do have a modified opinion. And that modified opinion could be a qualified one, so an except for, so they've got stock wrong, except for stock, everything's all right, but stock's not all right. And you do that as long as stock is material. Or it could be an adverse opinion where the thing is so big, the stock is so big that everything is misleading, what we call a pervasive one. That leads to an adverse opinion. It's the same with lack of evidence. You haven't got much evidence or enough evidence, and so therefore you have to put a modified opinion. What sort? A qualified one, if it's material, but this time not an adverse opinion. You're not saying everything's wrong, you're saying I've no idea. A disclaimer of opinion because it's pervasive. And for if you are changing the opinion, you just put basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. So there's an extra little paragraph that explains why you're changing the opinion.